Rohr here with early concise highlights on Friday, November 21st, 2014. It's currently 6:45 a.m. U.S. Central Time, and the major influence out of the strong U.S. news we saw yesterday is very big macro boost for the equities from a People's Bank of China rate cut and more aggressive QE talk from Super Mario over at the ECB. And we'll be exploring a bit more of that in a few minutes. So, what does all this mean to the markets? Well, it means that the U.S. S&P 500 future, short-term charts, hourly on the left, 30-minute on the right, is up at 2,067 this morning, up $15. And that is very impressive for other reasons as well. But first, let's explore how we got here. And our answer is, over the past couple of days, we have been noting how the lower supports that we had not quite gotten to on any of these dips going back into last week and the previous week should have been down around 20, 25 to 22. And the market left a false down break here at around 2030, played around holding up above that, but most importantly, in the last couple of days, on nervousness in front of the Fed going back to Wednesday, and on that negative news yesterday morning, the market backed off into the near-term congestion that we noted in a bull market might just hold it up, and that was between 2040 and the 2036 area. And of course, the market held right there, opening into it yesterday morning and immediately getting the bid back. And along the way, even though it didn't really close out of this more aggressive near-term upward channel, the push back above the 2046.5 area, well, we had to count this as a down break because of the extent of the sell-off, and it just showed the market wanted to hold up and negate that. That opens the door to the kind of aggressive strength we're seeing today. Now, in a nutshell, the oscillator resistance was at 2055 this week, moving up to 2060 or somewhat above it next week. Topping line on the weekly chart, 2065 this week, so we're already above it, and $5 higher into 2070 next week. That's very important for additional reasons, because with that line moving up, if the market can finish this week above it or push above it next week, it's also obviously well out on the oscillator. And the next oscillator resistance, which is all you've got at that point, is up toward more historic oscillator resistance up into the 2090 area. So that's going to be very interesting, and we shall see what we get. And that pretty much does it for the short-term view of the S&P 500.